SARS has adopted an accumulative method of taxing multiple lump sums received. We must add together all lump sums received in the tax year, and the accumulated total will be taxed using the set of tax tables applicable to the lump sum which you indicate as having been taken last in the current tax year. You have control over which set of tables Wintax will use, and whichever T you select will decide the set of tax tables to be used. In cases where more than one lump sum was taken in this current tax year, then you must select the T to the set of tables applicable to the lump sum taken last. Switching between selecting these new T buttons allows you to switch between tax tables used on the total of all lump sums taken. With different lump sums received maybe days apart in this current tax year, this may prove useful in matching the figures produced by SARS's choice of tables used. Let's say our taxpayer went on pension from a pension fund and also made a withdrawal of some of his provident fund, preferring to take the rest of the provident fund sometime in a future tax year. Let's say this taxpayer received a code 3915 lump sum of 500,000 Rand from his pension fund and also decided to take a code 3920 withdrawal of 100,000 Rand from the provident fund, all in the current tax year. The code 3920 pre-retirement withdrawal of 100,000 Rand from the provident fund is entered in the resignation column. The 500,000 pension lump sum is shown in the retirement column. As this 500,000 Rand pension lump sum was taken last in this tax year, we have selected the T button in the retirement column. This means the retirement benefit tax tables will be used for the accumulative totals of the lump sums. The amounts are all added together to make a total of 600,000 Rand. And the 600,000 total is taxed as per the retirement benefit set of tax tables selected, where the first 500,000 of the lump sum amount is tax-free. The balance of 100,000 Rand is taxed at 18% to give a tax of 18,000 Rand. We now have to use the same set of retirement tables to work out the tax on all the lump sums taken prior to the lump sum taken last. This means we apply the retirement tables to the 100,000 Rand. The first 500,000 Rand of the 100,000 Rand withdrawal amount is tax-free, so no tax is levied on the 100,000 Rand. Note that it is completely irrelevant what tax was actually levied on the 100,000 Rand withdrawal when it was paid out. So we have tax of 18,000 Rand on the 600,000 total, less no tax on the 100,000 withdrawal, which means tax of 18,000 Rand due. Superimposing the auto summary screen showing all the bottom lines, we can see 600,000 less 500,000 tax-free means the balance of 100,000 is taxed at 18%, which means tax of 18,000 Rand on the lump sum of 600,000 taken this year. What about a new case where the taxpayer went on pension last year and received a lump sum of 1.2 million from the pension fund? He then made a pre-retirement withdrawal of 500,000 Rand from his provident fund this year. The same rules apply as SARS's accumulative method of taxing lump sums also extends across tax years. All the lump sums are added together, and the set of tables used is the set of tables applicable to the lump sum taken or received most recently in this current tax year. The lump sum taken most recently was the 500,000 Rand received as the withdrawal from the Provident Fund. The total of all the lump sums taken this year and in all previous tax years after 2009 is 1.7 million taxed as per the withdrawal tax tables. The tax on 1.7 million is 459,000 less the tax that would or should have been due on the 1.2 million. It is irrelevant to the calculation what tax was actually paid on the lump sum taken last year. For the sake of this calculation, we credit the tax due of 459,000 on the 1.7 million total with the tax on the 1.2 million taxed using the same withdrawal tables. The tax on 1.2 million using the withdrawal tables will be 279,000 Rand. Subtracting the 279,000 from the 459,000 means that the tax due on the 500,000 Rand taken this year is 180,000 Rand. What if we reverse these amounts and say that the taxpayer received a lump sum withdrawal of 500,000 Rand last year and received a 1.2 million amount from his pension fund when he retired this year? Once again, we work out the tax on all the lump sums added together, but this time we use the retirement set of tables on the accumulative 1.7 million total. The tax is 364,500 Rand. From this, we have to subtract the tax on the 500,000 Rand lump sum taken last year using the same retirement set of tables. As this set of tables offers the first 500,000 Rand tax-free, the tax on the withdrawal amount taken last year will be 0. Therefore, the tax on the 1.2 million amount taken this year will be 364,500 Rand. Superimposing the auto summary screen, you can see it agrees that 364,500 Rand tax is due on the 1.2 million taken this year. One more example I'd like to show is where the taxpayer received a 300,000 Rand lump sum on retiring from his pension fund last year and made a 200,000 Rand withdrawal from his provident fund this year. One would be mistaken in thinking that after receiving the 300,000 Rand retirement amount last year, that our taxpayer was still entitled to another 200,000 Rand tax-free in future. This would be true if the lump sum taken in future was also a retirement lump sum. Remember that the first 500,000 Rand tax-free only applies to retirement lump sums.